Welcome back. You're with Market Guide with MD and CEO of the BSE, Mr. Ashish Chauhan. Mr. Chauhan, you were talking about how we need to create long-term plans, strategies, so as to avoid any kind of economic fluctuations like we witnessed over the last some time. Now, one result of that economic fluctuation has been the performance of corporate India and the battering that the confidence of the retail investor has seen. What would your advice be to any investor watching this program?
The investor, first and foremost, needs to learn which are the choices they have available. Then they need to also figure out what are the needs going to be as far as they can see. If they are young, they would want to behave differently vis-a-vis people who are sort of in retirement. And so they need to figure out what they want to sort of invest for, what are the choices they have available. And then they need to take a call, is that what has happened to that asset class? Because many times, although we are taught in economics that when the price of an asset goes up, the demand goes down, but that is true for consumption items like potatoes and so on and so forth. But for investment items, actually people invest more if the prices go up more. So we tend to believe that the past behavior of an asset class will continue to be the same in future. So for me, the real estate has given huge returns over last 10 years in India. Gold has given pretty large returns, partly due to the gold prices going up internationally, but partly due to rupees depreciation also. So effectively, India's money which is going into non-financial instruments over last 10 years, actually they have gone from say gold to real estate in a large way. So if India basically invests now less than 8% of its savings into financial instruments. But if you invest now in financial instruments, whether by way of fixed deposits or insurance or mutual funds or directly investing in stocks or ETFs and so on and so forth, you would be basically investing in India's growth, because what you invest in goes to the companies for setting up manufacturing plants or setting up services activities or hotels or defense and so on and so forth, and those guys create jobs. Today on stock markets you can invest in equities, equity derivatives, debentures, corporate debt as we call it, mutual fund distribution, and many instruments including currencies. And so how do you sort of estimate your requirements, your horizon in terms of the time frame,
and divide your portfolio among these various instruments available?
And by looking at the past, saying if this asset has given so much returns in the past, will it give similar returns in the future, or something else needs to be sort of gone into, is what is the trick you need to employ. And I think nobody is better than the investor himself
to gauge that. BSE itself is the oldest exchange in Asia. What is your vision for this, for the retail investors? How do you see it being able to embrace all these new technologies, these new requirements, and service its clients?
People trust market more today than they trust other asset classes in the same sort of financial instruments class. Having said that, we have not been able to reach more than 2% of Indian population, and so 98% of the population is still untouched in terms of investing in a stock market kind of a framework. For me, technology is only a tool. The best thing that is happening using technology is that earlier why we couldn't reach the towns, small towns and villages and so on and so forth, basically was because of the costs. You had to set up branch networks, the brokers had to actually spend a lot of money, and there were no coordination points that were available. Now the newer technology allows people to trade through internet, through mobile, gives them information on real time, and even through television like yours. And so effectively the cost of servicing a customer or an investor has come down drastically. And the second part of the sort of puzzle is about financial literacy. How do we reach out to people, make them aware that these are the various choices you have available in formal financial markets? The technology is allowing the financial market intermediaries, which are regulated well, to now go out into official towns, villages, and actually service these areas. So now, how do we make them aware of the choices, various choices, not only stock markets, but various choices that are available to them, how they can sort of participate in these markets in a safe, easy and hassle-free way. And once they participate, normally this also flows by example. So some people are able to invest well, and other people actually look at them, and that's how sort of the investment cycle starts. And that I have seen from FERA company days in 70s to later on in late 80s, and then even in sort of .com time. A lot of people come in because they send their sort of they see their friends, relatives actually investing well, earning great sort of good returns, and that's how they participate in those activities, whether that is insurance or and what will happen is, because we have not yet reached the formal finance, which is highly regulated, has not reached the local towns, I mean small towns and villages. We have kept space for unscrupulous people like so-called cheat funds and all, to move into that, take people's money and then not return. So basically there are two sort of good things about two pronged strategies for us to, one is use technology to reach out, and that will also help people to understand that there is a formal mechanism of finance or financial markets which are available, and that is much more protected, much more oversight from the government agencies, and that ensures that their money is safe. And once they see that by experience, of their friends, their own, and so on and so forth, they would want to invest more in the formal financial markets rather than informal markets, where they end up actually being taken for a ride.
Right. So better investor education to improve financial inclusion of the 98% that you say still needs to be introduced to investments, wealth creation, and to the equity markets. We're going to continue in conversation with Mr. Ashish Chauhan. Stay with us on Market Guide. We're talking about a possibility of a small and medium enterprises exchange. We have the same 5,000 to 6,000 companies listed as of now on the equity bourses. How is the life of an investor going to change?